Good morning, everybody. This is John Blank, PhD, Chief Equity Strategist of Zacks. Just as always, we'll go through the disclosures first. These are my views. They are not necessarily the views of Zacks Investment Research. So today we are going through the top stocks in computers and technology. Growth sector, interesting stuff, technological development, the future. Always interesting to talk about this stuff, and you can find some great stocks. I'm going to move fast here. We've got 30 slides. You can get these slides from us at Zacks, and we can take you through the details at a later stage. First one, balance sheet metrics. We'll go through their R&D as percent of sales, total debt to total assets, a reinvestment rate, and the cash flow to invested capital. Lots of balance sheet metrics can show us good and bad companies. Profit metrics, very straightforward here. Of course, more profits better. And we have a lot of different variables to look at. Net cash to market cap, enterprise value to EBITDA on a forward 12-month look, EBITDA per share, free cash flow margin, and return on invested capital, ROIC. We'll finish up as we always do with stock valuations. PEG ratio, the price to sales ratio, forward 12-month revenue look, and the PE ratio on a forward 12-month look. So let's just keep it in mind that we always keep this structure in place just so we can refer back to it. A lot of what we do today is just referring back later on with the slides. All right, balance sheet metrics. Like I said, we've got 5 choices here. We'll start off with R&D as percent of sales. Okay, number 1, I just want to point out R&D as percent of sales relative ratios. These are relative to their industries. Computer office equipment will be up here at the top. Software services are in the middle, and electronic semis are down here at the bottom. So keep this in mind. I put this up here to show you that, again, office equipment here, software services here, and semis down here. So this is a relative ratio to these industries. But we want the best one in the industry. So Cisco, Zoom, Meta Platforms, SAP, Infineon, which is the German Siemens spinoff, auto chip maker, and Intel, of course, so you know that name. Keep in mind, our R&D ratio as percent of sales, they're doing more R&D investment, likely to have more products that are high tech and worthy in the future. So a good ratio is a higher one, I would think, although there's obviously circumstances. For example, Meta and their metaverse probably was a poor idea. So keep in mind, there's always exceptions. All right, R&D as percent of sales here. Electronics is at the top. Miscellaneous tech is in the middle. Telco equipment is down at the bottom. So let's see who's doing well in their industries. KLAC is a great stock to know about, KLA Corp. Over here, we got Keysight. Keysight's a great instrument company. Keep that name in mind. Bruker, BRKR is a great company to know about. Juniper Networks, probably haven't looked into that. It's an old tech stock name that's come back. Qualcomm, and of course, the big Dutch company, ASML. You must always know that ASML is out there, and yes, they are adding R&D as a percent of sales. So KLAC and ASML, great names to keep in mind. Probably didn't know Keysight and Bruker. Those are also great names. On to the next one. Here we got total debt to total assets. Now, over here, I put what the total debt to total asset ratio is. The higher the ratio, the higher the degree of leverage, and consequently, the higher of risk of investing in a company. So this is a bearish metric. Those are at the top of this slide are things to be worried about. So let's go through the names. IBM, Oracle, Avago, Infineon, of course, Intuit, and Western Digital. So again, if you're looking for bearish signs, over-levered companies, you've got these names: IBM, Oracle, Avago, Western Digital, Intuit, and Infineon. Let's go to the next one. Again, like I said, I'm leaving these definitions on the right-hand side. Again, this is a bearish metric. So KLAC, SSEZY, Mettler Toledo, Integris, Vodafone, and SoftBank, the guy in Japan who's been selling assets. Again, a fairly accurate measure of things to be concerned with. Never one metric alone, but when they start to show up over and over again, like IBM has done and will do, you have to be somewhat concerned. All right, cash flow to invested capital. The net cash flow to invested capital represents the amount of cash flow generated by the company prior to consideration of how it is financed. Better cash flow to invested capital would be good. I put in the return on invested capital language here just to see how that plays out relative to this idea. So let's get through the names. Apple, Lenovo Group, Adobe, Meta Platforms, Texas Instrument, and STM, big chip company in Arizona. Fascinating to see how it's climbing up and becoming such a player now. And you can see, of course, Micron, how cyclical their cash flow is. Just an amazing outlier. Micron. On to the next slide. Cash flow to invested capital. KLAC, of course, Keysight again. Waters Company, which is in Massachusetts. There's a big instruments cluster in Massachusetts, WAT. You probably don't know. Put that on your radar screen. Ticker WAT. ASML's back. Of course, ASML. Look at that chart. They made a ton of money. Keep that in mind. KLAC, always looking for this stock to do well, and yes, it does do well. KDDIY and MTNOY are telco companies. KDDIY is in Japan. MTNOY is down in South Africa. These are, companies that you probably don't know because they're in the telco services space. Names you probably do know are in these electronics and miscellaneous tech areas. Let's get to 10. Reinvestment rate. Again, I put this over here. A reinvestment rate is the amount of interest that can be earned when money is taken out of a fixed income investment. So in general, you would like to be seeing a higher reinvestment rate. Let's see the names. Apple, NetApp, Adobe, Microsoft, AMD, and STM once again. On to the next one. KLAC again, of course. Keysight, of course. Waters, we talked about this name. Ticker WAT. Mettler Toledo, it's another one of those instrument companies that's worth knowing about. And down here we've got Verizon and another one of these small companies in, I think AVIFY is one that's out there in Asia somewhere. Okay, so reinvestment rate, again, mostly a positive, so we'll keep it bullish if you're in. I've circled you at the top of your industry. Balance sheet accruals. The balance sheet accrual ratio is used to judge how heavily the company depends on accruals to show a profit. A higher accrual ratio is a problem when the ratio indicates the company is relying heavily on accruals to sustain a profit. So again, now, if I'm circling here, it's bearish. Who's not to like? Cisco, Logitech, CRM, that's Salesforce, Tencent, Texas Instrument, and STM. Let's go to the next one. KLAC actually pops up here. SSE, which is a different company out there in the world. I think they're worth knowing about, but since this is bearish, let's skip them. ASML is in here. Bruker, MTNOY, and SoftBank again. SoftBank shows up a lot in the trepidation area. I would worry about SoftBank. Okay, on to the profit metrics. You get through 5 of these. Let's do it quickly and talk about the names mostly. Get these slides later on. That's the point of this whole exercise. A lot of data here. Data will provide you the background, and this is only an introduction to this entire subject. All right, first off, net cash to market cap. Of course, the higher you are in this, the better. I just want to point out Canon, it's a Japanese company. Lenovo Group, of course, is the Chinese personal computer maker. And down here is Tokyo Electron. A lot of times I see Japanese names. They run their businesses for net cash a lot more often, and you're going to see their names in here. So Canon, Lenovo Group, Meta Platforms, Adobe, NVIDIA, interestingly enough, is here. Tokyo Electron is here. On to the next one. All right, so again, some names you may not know. On High, which is a Taiwanese company, HNHPF, Lenovo Group once again. Taiwan Semi, ticker TSMM here. Fujifilm, great Japanese company. Like I said, a lot of times you'll see Japanese companies here. T-Mobile US and Advanced Information Services, which seems to be in Thailand. So anyway, interestingly enough, here's some names you probably didn't know about Han Hai. Worth knowing. Look at that chart. Very nice pattern. Take a look at Han Hai later on. All right, enterprise value to EBITDA. Basic point here is that for the S&P 500, these have typically averaged between 11 and 16. A general guideline is an EV below 10 is commonly interpreted as healthy. So these are very priced up stocks. These are the richly valued stocks. And yes, we're going to find some names that are the mega caps. Of course, they are richly valued. There's other things to worry about. Let's take a look. Apple, Western Digital, striking chart here. Interesting to worry about them. Microsoft, Intuit, Tokyo Electron, and NVIDIA. Let's go to the next one. All right, so who do we have here? Agilent, Perkin-Elmer, which you probably don't name, which is an instrument company, Vodafone, T-Mobile US, and Mettler-Toledo once again. Let's get to the next one. EBITDA per share. Okay, of course, this is just plainly better in earnings per share relative to the industry. So let's see who's in here. Canada's in here. Zoom's in here. Salesforce is in here. Microsoft is in here. AMD is in here. Tokyo Electron. We've heard that name a lot. There's a name for you to take a look at. Tokyo Electron. EBITDA per share. Okay, again, these are names up at the top are going to be in electronics that you may not know. There's Han Hai. Over here, we've got Bruker, which is a great name. Taiwan Semi, of course, Buffett invested in that. Down here, curious thing to put SoftBank. I would worry about that. That looks a little odd from a data perspective. And AMX, which is America Mobile, which is a Mexican wireless provider. All right, free cash flow margin. Again, gotta like someone in relative to their industry who has better free cash flow margin. It's all relative to your industry. So who's in here? Cisco, Zoom, SAP, Google, Intel, and yes, once again, a name I've put up a lot today, Tokyo Electron. All right, let's get on with this. Han Hai's in here. Bruker is in here. Mettler-Toledo again. And MTNOY, which is one of those telco companies in Asia. Let's move to the next one. Return on invested capital. Of course, this is obviously shareholder specific. You want to see a good one here. Who is in here? Let's take a look. IBM is in here. Zoom is in here. Salesforce is in here. Microsoft is in here. Avago is in here. Infineon, great German tech stock, chip maker for the autos. You gotta like it if you like European electrification of vehicles. On to the next one. Who are we looking for here? We see Fujifilm, Taiwan Semiconductor, Lam Research, and MTNOY. Once again, this MTNOY, if you're looking for an Asian telco play, seems to pop up a fair amount. Actually, now that I think about it, MTNOY is down in South Africa. Sorry about that. Next one. Stock valuation metrics. Of course, this matters. PEG ratio we'll go through first. Price to sales we'll go through second. Then we'll drop into the forward look on revenue and finish up with the forward look on PE ratios. PEG ratio, of course, is where I like to go first. I've circled both good and bad. Of course, a low PEG ratio is what you want. High PEG ratio is probably an overvalued stock. So let's go through who might we like. NetApp looks good. Tencent looks good. Avago looks good. MCHP, which is a nice chip stock to know about. Who is not to like? IBM. See them a lot in the negatives. Not good. Microsoft. Intel, of course, is not looking good in their industry versus Avago. That's very worth noting. And STM actually comes out at 2.3 for a chip company. That's very high. Keep that in mind. Intuit doesn't do well. SAP does well. NetApp does well. Lenovo Group, super pricey stock relative to its growth potential. On to the next one. So here we got APH versus Agilent. Agilent looks good. Over here we got HOCPY versus Telefonica, which looks bad. Waters again. Remember that name. Perkin-Elmer, actually the better trade. Take a look at PKI with a 0.5. You have to like that PEG ratio here. AMAT looks poor. Taiwan Semi looks very good over here. T-Mobile US looks good. And down here, America Mobile turns out to be a poor trade from a PEG perspective. Again, folks, this is just to help you out looking for names and looking for ways to look into things that should not be conclusive on any one indicator. Right, price to sales. Interestingly enough, when people are paying up for price to sales, they're believing the story of the company a little better. Not surprising, you're going to see the mega caps in here, but you're going to see a lot of other names that you can trade and play. This is very much more the tradable names. So Apple, Microsoft, NVIDIA, NetApp, Adobe, and ADI. Ticker ADI, take a look at that. It's in the 70s. You probably don't know that name since it's in the 70s, so go ahead and take a look at ADI. All right, so once again, I want to talk about, and I put over here, Perkin-Elmer, which is here, and Waters, which is right beneath them here. So I put up Perkin-Elmer's story and Waters only because the instrument cluster in Massachusetts outside of Boston, Milford and Waltham are suburbs of Boston, worth knowing how this whole thing plays out. You can pick your hand in the instrument space in Massachusetts. It's a really interesting spot to know about. Silicon Valley gets a lot of airtime. Give this some life. Take a look at this. Obviously, KLAC, we've talked about this name a fair amount. ASML, once again, back again. T-Mobile US in the telco space seems to come up again and again and again. Keep that in mind. Revenue forward 12 month. Of course, who do we want here? Let's take a look. Cisco, Zoom, Adobe, Tencent, Texas Instruments, and ADI once again. On to the next one. We've got Taiwan Semiconductor, Bruker, Orange, which is a French telco based in Paris, and of course AT&T down there at the bottom. I'll finish up quickly with the forward PE looks, relative 3-month differences, who are basically stronger. I just want to point out, this is, for the most part, just going to point out the mega caps. That's to be no surprise. We all know that the NASDAQ and the mega caps and the Qs are all kind of being traded on based on these beliefs in these large companies in the United States. Apple's there, of course. Microsoft is there, of course. All right. So I hope this has been helpful. If there's more names to look into, you can find them here, circled in red throughout this chart stack. That is how I did it. This is a quick review because I have so much information. Get these slides from us. Thanks for attending. And here's how you can get a hold of these slides. 866-794-6065. Let me stop a bit and say that again. 866-794-6065. Or get us an email at strategycall@zackspro.com. Or get us on the web at www.zackspro.com. We've also got a Twitter feed at @ZATools and a LinkedIn page with Zacks Professional Services. I hope you enjoyed this. It's really about the slides today and the big stocks that are in it. That's really the case here. This is a real worthy place to get some good ideas and then look further into them. Thanks much.